Hello everyone and welcome back to Finance Prep, Finance Made Easy. So today in this video we are going to start with a new unit, that is unit number 6. In unit 6 we speak about the different people or entities or channels that are involved in the process of mutual fund distribution. So in this particular unit we are going to talk about what are the different mutual fund distributor channels, what are the different individuals or entities that are involved in this process, what is the role and importance of the mutual fund distributors in the entire channel? What are the different modes of distribution that can be used, the physical mode, the digitalized mode, etc. What are the prerequisites to become a mutual fund distributor? And the revenue of a mutual fund distributor, as well as the different disclosure rules that are mandated by SEBI for mutual fund distributors. So you learn everything about how to become a mutual fund distributor, their prerequisites, how do you earn by becoming a mutual fund distributor, what are the different sources of earning, what can be the total composite earning, why it is such an attractive opportunity that people tend to go for. Okay, so let us start with the chapter. Now, if we talk about the role and importance of mutual fund distributor, in the entire channel, there are two people that play a very important role. That is the mutual fund distributor as well as the fund manager. And I'll tell you the reason why. Now, when you talk about a mutual fund distributor, if you are an investor and you are looking to invest in any mutual fund scheme, it is the mutual fund distributor that actually understands your financial objective, what are you trying to achieve, what are your financial goals, and accordingly they suggest you the correct schemes that you should be investing in to fulfill your financial objectives. So mutual fund distributors are very important. They actually tell you or guide you based on the various schemes that are available and where you should invest, where you can complete your financial goals. The second person who is very important is the fund manager, and that is because he or she is the person who actually decides on where your money will be invested. So you can actually say how much returns will you earn might in a way depend on the fund manager, their efficacy, their efficiency, their knowledge, their decision making abilities, strategies, etc. So in the entire chain, these two people play a very important role for an investor, because the investor always has a financial goals that they want to achieve by investing into different mutual fund schemes. But to choose the correct scheme, it is a mutual fund distributor that plays an important role, and to ensure that the goal is achieved, it is a fund manager that plays an important role. Okay. Now, if we talk about the fund manager, why a fund manager is important? The first reason, because the fund manager actually develops the portfolio of the scheme. That is, they really decide on where the money will be invested and in what proportion. Second, they analyze the data of the company, the industry trends, economic conditions, liquidity, market, mood, positions, etc. See, the fund manager has a very critical role in data collection and analysis so that they can find out the different opportunities or areas where the investments can be made to get optimum level of returns. Invest according to the scheme's investment objective. Now, every scheme will have different objectives. So, based on the scheme's objective, the portfolio has to be designed. Focuses on market and securities. They have a constant understanding and a view of the market, their trends, their research, etc. because accordingly they keep on changing the portfolio as well. Now, if we talk about the mutual fund distributor, their main goal is to understand the need of the investors, their financial goals, what is the risk appetite, how much of risk are they willing to take, what is the total level of income, what is the time horizon in which they want to complete their financial goal. After understanding all these details of the investor, they prepare a suitable asset allocation plan, which means based on every individual investor's details. See, every investor is going to be different. Their goals are going to be different. Their time horizons are going to be different. Their level of investments that they can make is going to be different. Their risk appetite is going to be different. So, after understanding individual investors' details, it is a duty of the mutual fund distributor to understand that based on their goals and other details, where the money has to be invested so that their financial goals can be completed within the time horizon. recommend appropriate mutual fund schemes based on their details, and focus on investor, not the market. So here my focus has to always be the benefit of the investor, or in a way I have to understand this is their goal and my duty is to help them achieve their goals. Correct? Role of a distributor. Now, when you talk about the role of a mutual fund distributor, obviously it is a very important role that a person plays in the entire mutual fund distribution channel, where they really help the investor in selecting the correct mutual fund scheme out of the all that are available in the market. Because the needs, the financial goals, the financial horizons, etc. of every investor is different. So if I am a person and I am willing to invest in a mutual fund scheme, I might literally get confused, because there are so many mutual fund schemes and understanding these schemes, reading out all the documents of all the schemes is practically impossible. That is when the mutual fund distributor plays a very important role. They also ensure that the investments are aligned with the investor's financial goals. That is, depending on the goal, the time horizon, the scheme has to be suggested. Now, whether the goal is wealth creation or regular income, the goals can be different. And based on this goal, the scheme suggested also might be different. So, providing them proper guidance, providing them proper or suggesting them proper mutual fund schemes that suit their requirements is the duty of the distributor. And hence, a mutual fund distributor acts as a very important link between the investor and the mutual fund company, where they ensure there is proper communication done to the investor, the schemes are explained, etc. to the investor. Correct? Now, if we talk about the different kinds of mutual fund distributors. Now, when you talk about a mutual fund distributor, generally you assume the distributor to be an individual. But in reality, it is not only one person or an individual who can become a mutual fund distributor. Whether you talk about banks or NBFCs or national or regional distributors or e-commerce platforms, they all are people or entities that can work as a mutual fund distributor. Correct? In India, if we talk about the mutual funds, they're distributed through various channels. It can be individual distributors, it can be NBFCs, it can be different entities, it can be any e-commerce or digital platform, their websites and mobile apps, etc. Now, if you talk about Zerodha, if you talk about Grow, they are the digital platforms, they are doing the job of a mutual fund distributor, right? So, any bank like the public sector bank or private sector bank, foreign bank, small finance bank, NBFC, stock brokers, national and regional distributors and e-commerce platforms, they all act as a mutual fund distributor. Correct? They all can distribute the various schemes of the mutual fund. Now, obviously, to become a mutual fund distributor, you need to have certain certifications. Now, if you are an entity, for example, I am a bank, and I want to become a mutual fund distributor. Now, bank is not an individual, so they cannot do the NISM mutual fund distribution model certification. But their employees that are appointed by the bank to do the job have to complete that certification then. Okay. Now, when you talk about the modes of distribution, how the mutual fund schemes are distributed, that is the modes of the distribution. So, initially they were done via physical application forms. If you remember, in the last unit, we had studied that before signing any application form, you need to read the documents thoroughly, because there is the principle of caveat emptor, let the buyer be informed. So, initially when the mutual fund schemes were distributed, there was an application form that you had to read, fill up the details, sign and give it. Correct? But eventually, when things became digitalized, when internet and digitalization kept on expanding in India, now there are different digitalized modes such as internet, mobile phone, websites, different applications through which you can do the same process of distribution of mutual fund schemes. So, there is a physical mode as well. There is a digital mode as well. There are various mobile websites and applications, etc., through which the schemes can be distributed as well as purchased. And then there is a hybrid mode as well. So, there are certain distributors that have both the options. If you want to go via digital mode, they have that as well. They also have the application form process as well. There are certain distributors that also have a process where some things are digitalized, but some things have to be in a physical form. Correct? So, all three possibilities are there, where you can have a physical mode of distribution, a digital mode of distribution, or a combination of both. Okay? Now, if we talk about the modes of distribution, originally it was always via paper, but with internet, mobile distribution, websites, etc., are increasing in India day by day. Some use a hybrid mode where they use both digital as well as the physical method. Okay. Now we talk about the online channel partners. There are certain distributors that have their own websites through which they distribute various mutual fund schemes. Also, digital mode has certain advantages. So that is what you need to understand. When you have a digital mode of distribution of mutual fund scheme, there is no constraint of the geographical area. Okay, because see, if I have a physical mode of distribution of scheme, I can only get investors from one particular area that can reach out to my center and submit their application forms. But when you put it on a website or a mobile application, any person from anywhere in India can access the website and the mobile phone application via internet, and they can invest in the mutual fund schemes via your website or your application. So obviously this is an advantage that you get when you use the digital mode of distribution of mutual fund schemes, correct? There are a lot of investors that obviously even prefer the online mode. If you talk about me personally, I do prefer the online mode as well, because there is less of paperwork. There are no constraint as to you have to travel to go to the distributor's place, sign the documents, the paperwork. Less time, more convenient, easy access. Okay. When you talk about the stock exchange platforms, now SEBI has also allowed the buying and selling or the trade of mutual fund schemes on stock exchanges as well. On NSE, there is a separate unit known as NMF2, and on BSE, the unit is known as BSE star MF. So these two platforms of NSE and BSE trade mutual fund schemes as well. Okay. When you talk about hybrid mode, okay, now when you talk about the stock exchange platform, it also has certain advantages. The cost is low because you already have a set platform. Okay, so you don't have to incur additional cost to develop a platform, correct? There is a deeper reach because people who are trading into stock exchanges, into different securities, they can be reached as well. Seamless transaction, because if you talk about the dealings in stock exchanges, or if you have ever dealt in stock exchanges, they have the processes so much secured and set that their processes are so smooth. So when you invest in mutual fund schemes via stock exchange, you're going to have the same experience. Then you talk about the units in demat account. So like any other securities that you trade on stock exchanges, similarly when you trade in mutual fund schemes as well, the units of the mutual fund scheme are again shown or credited in your demat account. So there's one account where you can manage all your securities, including the units of your mutual fund scheme, correct? When you talk about the hybrid mode, where some transactions are done digitally, whereas some are insisted to be done physically, in this case, the purchase and redemption of mutual fund or SIP, STP, SWP, switch facilities, these all are possible, okay? Again, these modes are developed for the convenience or the seamless experience of the investors, because obviously we are willing to have more investments into mutual funds, correct? We are encouraging people to invest into mutual funds or SIPs. So the more we make their experience convenient and seamless, the more are we going to attract people to invest into mutual fund schemes, okay? When you talk about MFU, that is a mutual fund utilities, the mutual fund utilities is set up as a transaction aggregation, right? Where all the people who are involved in the process of mutual fund buying or selling or their trade, like the investors or the AMCs, RTAs, distributors, etc., they all are aggregated under one platform where they do all their exchanges, right? When you talk about the common account number, that is the CAN, every investor gets a CAN only after the KYC compliance. Okay, what you need to understand is the CAN and the KYC is a one-time process. You don't have to do the KYC every time you invest into a different mutual fund scheme. For example, today if you're willing to starting to invest into mutual fund scheme, the first thing you need to do is your KYC process. Once that KYC process is completed, you can apply for a CAN number. Once you have a CAN number, the same number and the same KYC is used across all the mutual fund schemes that you're willing to invest into. So it is just a one-time process, okay? The CAN will always be allotted only after you finish your KYC compliance. Whatever mutual fund holdings you have, in whichever AMC, in whichever scheme, they all are consolidated under one CAN number. So there is a common transaction form that you have to fill, which is applicable for multiple schemes. Okay, so single payment for multiple investments is possible, and online access for viewing, holding and complaints is easily possible. Okay, so you have to fill a single application form, you get the KYC, CAN done, they all are one-time processes. Once that is completed, you can invest into different mutual fund schemes using the same details, and all your holding is shown under one head only, whether it be with different AMCs, with different investment schemes as well, right? Now, there are distributor applications as well. Okay, so there are smartphone applications, there are websites that you can use to invest into mutual fund schemes so that it is seamless, faster and more convenient for the investors. Now, these are created by the distributors for their clients for their convenience and easy access as well. Because as of today, there are a lot of investors that literally prefer the digital mode of investment. Correct? The next is the AMC electronic platform. Various AMCs have their own website and mobile applications. Some have also a WhatsApp method or a WhatsApp way where you can actually raise your queries, ask questions, get details, etc. So here, as an investor, you're directly dealing with the AMC. There is no intermediary involved in this process when you have websites, applications, etc. that are created by the AMC. Different AMCs will have their different websites, their different applications as well, right? Okay, now this is a very important part. Though different individuals or entities can become a mutual fund distributor, it can be an individual, it can be a bank, it can be an NBFC, it can be any person who is into e-commerce, etc. But the point is, there are certain criterias, eligibility criterias that you need to fulfill to become a mutual fund distributor. This applies to any person. If it applies to an individual, it applies to an entity, both. Okay. What are the different criteria or the eligibility requirements to become a mutual fund distributor in India? An AMC can have an individual bank, NBFC or an e-commerce company to become a mutual fund distributor. But after they fulfill certain mandatory conditions that are laid down by SEBI. The first mandatory condition is you need to have the NISM certification that we are doing as of now. Okay, so when you talk about becoming a mutual fund distributor, it is mandatory to complete the NISM Series 5A Mutual Fund Distributor exam. Okay, so you have to clear or pass this exam. Only after doing so, you can become a mutual fund distributor in India. Now, if we talk about entities who are dealing into it, entities cannot give exams. They are artificial person. So, their employees who sell the mutual fund schemes to the investor need to pass this exam. Okay. Now, exemption for person who were 50 years or above. Now, there is a special exemption, but with certain conditions, right? Any person who is above 50 years of age or has a 10 plus years of experience in mutual fund distribution as on May 31st, 2010. Okay, so this exemption is only till 2010, right? After that, all have to complete the certification. They can obtain certification through continuing professional education instead of the exam. So, they have an option of giving the CPE, and once they clear the CPE, they get the mutual fund distributor license also. They don't have to appear for the NISM exam here. But only if the person was 50 plus years of age in 2010 or the person has had 10 plus years of experience in 2010. Okay. Now, when you talk about KYD, that is know your distributor, this part is very important if you are an investor. This is very important for you. Right? When you talk about the KYD, it was introduced by AMFI, that is Association of Mutual Funds in India. Now, the purpose is to verify the identity of a distributor. It is a distributor who is suggesting you the schemes. It is the distributor who is doing all the paperwork that are required for that particular scheme. So, it is very important as an investor to know your distributor. Now, how to do that? There are certain processes. The first thing, the PAN and address proof submission at CAMS portal. There is a biometric verification where a right hand index finger biometric verification is done. And there is an acknowledgement after the completion. Okay, so you can always ask for their details or their mutual fund distributor license number. Okay, for non-individual distributors, the person undergo biometric who are working for that particular entity. So the same logic applies. If I am a bank and I am a mutual fund distributor, the employees that are working in my bank involved in the distribution of mutual fund scheme needs to have the NISM certification and needs to go through the verification process of the KYD, that is know your distributor. Okay. When you talk about the AMFI registration number, that is the ARN number that every mutual fund distributor in India should have. To get the ARN number, you need to clear your NISM certification. You need to complete your KYD process. Then you need to apply to AMFI to issue an ARN number. After the AMFI verifies all your details, you receive an ARN number. This ARN number is to be quoted to the investors whenever you are dealing with them. Okay. Now there are again certain prerequisites. You need to be an adult, that is minimum 18 years of age. ARN number is mandatory to earn commission. If you do not have an ARN number, you do not receive your commissions that you earn while selling the mutual fund schemes. And commission is a major source of earning, or you can say the only source of earning of any mutual fund agent. From 1st October 2024, the ARN and EUIN applications are made only through the online mode. So when you talk about the digitalization, it also applies to the processes that the AMFI is undertaking. So any person who is willing to apply for an AR number has to do it only via the online mode. The offline mode is no more functional. Okay. When you talk about the empanelment with the AMCs, for the empanelment, ARN number alone is not enough, right? So if you want to become a person who is empaneled with the AMCs as a mutual fund distributor, you cannot just go there, quote your ARN number and become a mutual fund distributor of an AMC. With the ARN number, you also need to have empaneled distributor ID. Okay. So what you need to understand is, okay, I'll give you a simple example. For example, tomorrow I give the NISM 5A exam. I clear that exam. I apply to AMFI for the ARN number. Okay, I do the KYD, apply for the ARN number. I have the ARN number. I think I can start selling mutual fund schemes of any AMC. No, that is not how it works. If I want to sell the mutual fund schemes of X AMC, I have to get empaneled with that particular AMC. I have to enter myself or register myself with that AMC as a mutual fund distributor. Okay, I can empanel myself with multiple AMCs. I can do it with X, Y, Z, D, E, F. I can do it with multiple agencies. But the point is, unless and until I'm not empaneled with that AMC, I cannot sell the mutual fund schemes of that particular AMC. Okay, so you have the ARN, you go to the AMC, you apply to be empaneled. Once you are empaneled, only then you can start selling the mutual fund schemes of that particular AMC. Okay, empanelment can be done with multiple AMCs to get maximum out of it, or to sell maximum schemes and earn maximum commission as well. Okay, when you talk about EUIN, that is Employee Unique Identity Number, for institutions like banks, NBFCs, any companies who become a mutual fund distributor, the employees of that particular entity must pass the NISM 5A exam, obtain this number from AMFI, must quote the number in client application form. This is mandatory. And there is no separate ARN needed. They operate under the institute's ARN. Okay. So if I am an employee of a mutual fund distributor entity, I will not have the ARN number. The ARN number will be issued on the name of the entity who is registered as a mutual fund distributor. If I am an employee, I get the EUIN number. Okay, again the process to apply for that has become online. Empanel with AMCs, ARN alone is not enough, like I've already taught you. Distributors should get empaneled with the AMC and only then they can sell the schemes and earn commissions on that particular scheme. However, you can get empaneled with multiple agencies or AMCs simultaneously. Okay. Whenever you are going for empanelment with any AMC, there are certain informations that you need to declare. First, give your correct information. certain personal informations like your name, age, gender, address, etc. will be asked. You have to give the correct information. You have to maintain complete confidentiality of the details of their clients. Follow the SEBI AMFI guidelines. Not rebate commissions or give gifts. Again, this is completely prohibited. If you're caught giving rebates or gifts, your ARN number or EUIN number can be cancelled. Okay. Ensure risk factors are always disclosed. Ensure employees have EUIN. Again, this is mandatory. If your employees who are dealing or selling mutual fund schemes do not have EUIN, it is a legal offense. Okay. Accept AMC's right to terminate the empanelment if you breach any of their conditions or do anything that is unethical or illegal. Okay. Now, when you talk about the revenue of a mutual fund distributor, now this is very important. If you are thinking or willing to become a mutual fund distributor, you should know how will you earn and what is your earning scope or prospects. Okay. A mutual fund distributor, they earn income in the form of commission. Now, the commission is paid on the basis of the mutual fund schemes that you sell and the amount or NAV of that mutual fund scheme. I'll give you an example ahead. Okay. So, when you talk about the mutual fund distributor, the main source of earning is the commission that they receive on the mutual fund schemes that they sell. The commission structure again is strictly regulated by SEBI. So, you cannot quote any amount of commission. The commission structure is again defined by SEBI and has to be followed. Over the years, the SEBI has moved towards a cleaner and more investor-friendly structure because they work towards a protection of the investors here. So, as of today, the distributors are compensated only through trail commission and the earlier system of upfront commission and transaction charges has been withdrawn. What is trail commission? That is what you need to know. Okay. Now, when you talk about the trail commission model that has been brought about by SEBI, AMCs must follow a full trail commission model where there is no upfront commission allowed, no upfronting of trail commission directly or indirectly, no non-monetary incentives like gifts, sponsorships, etc. is allowed. Okay. How does the trail commission work? Okay. So, when you calculate the trail commission, it is calculated as per the percentage of the net assets that are attributable to the unit sold by the distributor. It is calculated on a daily AUM, paid monthly or quarterly, and commission is linked to current NAV, not original investment amount. So, if the market performs well and the NAV increases, the commission that you earn as a mutual fund distributor also increases. Okay. So, you earn more when the market is performing well. Now, how the trail commission is calculated? The AUM into the trail rate per annum divided by 365. Why 365? Because this is calculated on a daily basis. So, it is divided by 365. For example, there is an investor who has invested 10 lakh rupees in a mutual fund scheme that you have offered. Okay. The NAV is 10 per unit as of today. Number of units will be 1 lakh because the total investment is 10 lakh. If the NAV of 1 unit is 10 rupees, so the number of units that the investor has bought is 1 lakh units. Trail rate is fixed as 1% per annum. It is 1% per annum. Okay. So, the daily commission will be 10 lakh into 1% divided by 365 because it is 1% per annum and you are calculating the commission on a daily basis. So, you earn 27 rupees per day out of the scheme that you have sold. Now, a lot of times the figures in a way are not appealing. They look very demotivating that I have sold a scheme worth 10 lakh rupees and I earn only 27 rupees a day. But what you need to understand is this is one scheme that you have sold. If the NAV increases to 15 or 20 or 25 or 30, your commission will also increase without putting any additional efforts. And you get this commission till the investor stays invested. So, it is a one-time effort. You sell the scheme, you earn the commission for years and years till the investor stays invested in that particular scheme. That person might bring different schemes from you again, might suggest you to different people, and you might end up selling hundreds and thousands of such schemes. So in a month, if I sell 30 schemes, the second month I sell 30 schemes, the third month I sell 30 schemes. In the third month, the commission that I'm earning is from 90 schemes and not just the 30 schemes. So imagine your total commission that you earn in a year or 2 years or 5 years down the line when you're working as a mutual fund distributor. So when you multiply this amount based on the schemes that you sell over a period of time, over a few years, your commission is going to be really attractive. The numbers are going to be really appealing. Okay. You need to understand that there is no commission that will be paid for self-investment. If you yourself end up investing into different mutual fund schemes, you're not going to receive commission for your own investment that you have made. Okay. Distributors must disclose commission received from competing schemes. Now, if I'm a distributor and if there are two schemes offered by two AMCs or they're competing themselves, I have to disclose the commission I earn from both the schemes. Okay, because they are conflicting schemes here. Commission structure is decided by AMC as per business policy within SEBI guidelines. So, the commission structure of different AMCs might be different, marginally different, but it has to be under the SEBI guidelines and whatever are the limits that they have set. Okay. Now, when you talk about the additional commission and transaction charges, there is a possibility of earning an additional commission except for the trail commission as well. Now, this is done by SEBI to, encourage wider participation and encourage more investors to invest into mutual fund scheme. But there are certain criteria when this additional commission will be paid. Any place, if you mobilize an investment from an investor who belongs to B30 cities, that is the cities and town beyond the top 30 locations, apart from the top 30 locations, you end up getting an investment from any other location, you get an additional commission over and above your trail commission. Okay. If you're onboarding new individual investors, encouraging participation of women investors as well. So if you get in a new investor who is investing for the first time in a mutual fund scheme, okay, it has to be a person who is investing for the first time. So the person who is applying for KYC and CN number. Okay. If you encourage women participation, if you get more women to invest into mutual fund schemes, in these three cases, you end up getting additional commission, which is over and above your trail commission. So trail commission is something that you're going to receive. But in these cases, you will get an additional commission over and above your trail commission. Okay. Now, when you talk about the transaction charges, earlier the transaction charges were always deducted from the investment that was made by the investor. However, as per the new circular that the SEBI had circulated in August 2025, the transaction charge framework has been withdrawn. So now the investors, they do not have to pay any upfront charges here. The distributors are compensated by the AMC, not the investor. Okay. This reinforces the idea that the distributors act as agents of the AMC and not the investor. They're the agents of the AMC where they're helping the AMC sell their mutual fund scheme. So why does the investor have to pay the transaction charges, right? So as of 2025, the transaction charges burden from the investors was withdrawn and put over to AMC, right? GST on distributor commission. Now, this is a very important part. So, if you're a mutual fund distributor and you earn commissions, the commissions that you earn and the net money that you receive will vary based on the GST percentage that is charged on your commission. So, if you're a mutual fund distributor and you have a GST number which is mandatorily required if your turnover exceeds 20 lakh rupees, in this case, the distributor raises an invoice and pays GST to the government, right? If the distributor is not registered under the GST number, like if your turnover is not 20 lakh rupees a year, AMC pays the GST under the reverse charge mechanism, and under RCM, the recipient, that is the AMC, pays tax instead of the supplier. So in any cases, the government is going to earn the taxes, either directly via the distributor via GST or via the AMC via GST or the RMC. So GST has been applicable from July 2017. Okay. Commission disclosure mandated by SEBI. Now, this is something that is compulsorily to be done by every mutual fund distributor, whether an whether an individual or an entity. Now, this is mainly done to enhance the transparency and to prevent mis-selling. SEBI has mandated mutual funds and AMCs to publicly disclose commission-related information of large distributors. So, here you're talking about the entities that sell a lot of mutual fund schemes in bulk with high values in large amounts, right? Objective is very simple. Whenever a distributor is mobilizing funds, selling their schemes, a significant asset or earns high commission, investors should be able to see that information in a public domain. That is as simple as that. So, in a way, I have an understanding about the quantum of schemes that one particular entity is selling here. Okay. When is disclosure required? So, AMCs must disclose total commission and expenses paid to distributor who meet any one of the following conditions. So, the disclosure is required only under certain conditions. For example, if any distributor has more than 20 locations, multiple points of presence where they are spread across the country, spread across the cities, correct? They are considered as huge distributors, right? The distributor has mobilized more than 100 crores AUM across industry in the non-institutional category, including HNIs. So, if you are in a way mobilizing a huge quantum of money, right, the distributor has received more than 1 crore commission per annum across the industry. So, obviously, if you are mobilizing more than 100 crores per annum, taking 1% as the rate that has been set by SEBI, it has to be more than 1 crore, right? The distributor has received more than 50 lakh commission from a single AMC. Okay, now as a distributor, I can get empaneled with multiple AMCs, right? So, if my total amount of commission or the amount that I have pooled in investment does not cross 100 crore or 1 crore of commission, but even if with a single AMC, I have pooled in more than 50 lakhs as commission, in that case also I have to disclose the information. These disclosures must be made on the AMC's website, and additionally AMCs are required to submit this data to AMFI, which will publish the same consolidated industry level data on its websites as well. So if you are a retail distributor or an individual distributor or a small distributor, you do not have to disclose this information. It is only for large distributors to have transparency on their commission that they earn via different schemes or via different AMCs. Okay. Additional mandatory disclosures that are required beyond the total commission and expenses, the AMC also has to disclose certain other information. What are the gross inflows, net inflows, their average AUM, ratio of AUM to gross inflows, whether the distributor is an associate or group company of the sponsor. Again, if the distributor is an associate or the group company of the sponsor, there is a conflict of interest here as well. So, if there is a conflict of interest, it has to be disclosed. Okay. This framework will help the investors identify possible conflicts of interest and excessive churning as well, and accordingly make their decisions, right? So, even if you act as a distributor or an AMC, there are certain informations that are mandated by SEBI to be disclosed. And the logic remains the same to ensure complete transparency in the entire mutual fund distribution process. Okay. In the next lecture, we will continue with certain other documents that are disclosed or certain other informations that are given in the mutual fund distribution system in lecture number 2 of chapter 6. But as of today, bye-bye, see you, take care and have a great day.